I think that stock to flow worked, or is yet to be disproven, was brilliant, right? Because it was a hypothesis. We all kind of grabbed hold of it and thought, maybe this is the one. And it's worked perfectly. Whether that's it's actually implicitly the behavior of crowds, but that was one hell of a story that I don't think that, I think it was one of the features of this year. If there was one thing we all pinned our hopes on, was that hypothesis playing out. So I think that was probably the biggest story in crypto, along with the rise of DeFi. In the kind of spotty, sporadic way that it came about. But I think DeFi was really interesting. It opened our minds to, okay, we can disrupt a whole other part of the financial system. We knew it was kind of coming, but when it came, it was interesting. And that was the development of the time value of money within the crypto world. And that's a very important role. So I thought that was a really big and important story in crypto. And obviously the rise of the institution, as I call it, the wall of money. I mean, that's a huge story that people didn't really believe it was going to happen. And now everyone's trying to get used to the fact that the rules have changed, and they're not really happy about it.
Well, we're setting up for the next set of battles, right? Around what Bitcoin is supposed to be and how it's supposed to function. Actually, later today, I'm literally recording with Ben Hunt and Alex Gladstein to discuss that exact question of, can Bitcoin turn into something other than just another Wall Street casino game, which is kind of a quote from Ben about that. It's the next question. And I think it's going to be really fascinating to see. I did have a question that I thought that you would be particularly well suited to answer around almost the combination of DeFi and that institutional shift, right? You've obviously spent a lot of time looking at that institutional shift. So much airtime on this podcast and other places has been spent on that. It's obviously a defining feature of this year as it relates to Bitcoin. But I think, especially as we hover around this 20,000 mark, it reminds us of 2017. We ask what's the same, what's different. And part of what, the characteristic of a 2017 rally was Bitcoin was surging, but at the same time, the other thing in the crypto space were these ICOs, right? That were kind of just shedding off buco bucks. They were kind of hot air in most cases, even if they had well intentions. How much did it matter that the other things happening in crypto this year were real? At least they were things that were actually built and happening, even if there was some mania around it. It didn't exist. It existed in more than just a white paper.
I think it's pretty similar. I think the ICO thing, yes, people feel a little bit sick and burnt because everyone got wrapped up into that. The actual thing is tokens aren't going away, and it's just a matter now of working through what are the real use cases for them. And I think that lay the ground for it. I think DeFi is going to have similar kinds of problems. There's tons of these projects, and I've seen a ton of them that just aren't really DeFi. And there's a bunch of people really working hard on getting it right. And a lot of people won't get it right at first time, but the foundation is being laid. So I think DeFi will be a feature of this rally, and there'll be a lot of projects that fail, but that's okay again, and people call them scams and blah, 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 but it's a feature of the nascent part of this space. This is a whole new thing just developing, and people are trying to throw stuff against the wall and see what sticks. Now, people need to be careful in how they invest in that space, but to watch it, it's truly extraordinary. I am surprised how few people understand how big this is. I think the space is going, la, 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 I can't hear you, because they don't want to pretend that governments can be involved in the digital space. And then it's like, it's not Bitcoin, and the central banks aren't saying it is either. What they're telling us is that they are going to change the rules of economics. And the shift is going to be towards behavioral economics and away from traditional economics schools of thought. Because when you can give different people different incentive schemes, you basically reinvented Facebook. But Facebook with money is a huge thing. So this is what the central banks are talking about. So not only is it great for Bitcoin because we have digital on-ramps and off-ramps and everything becomes easier, but literally everything is going to change. How the dollar plays in the global system. The IMF want to make this part of the narrative too. So we're talking secular, forth-turning, massive shifts that are potentially on the horizon. It won't play out overnight. It's not, well, it could do. Bretton Woods did, and stuff like that. It could play out overnight. I don't think so. I think it's just something that will change, and before you know it, you look back and go, oh my God, the world's entirely different than it used to be. Okay, this is the crucial thing I keep trying to pound the table about, is you don't have monetary policy any longer. It's basically lip service. It doesn't work in Europe, it doesn't work in Japan. It basically just frees up some assets on bank balance sheets. Velocity of money's collapsed. They don't really lend out particularly, they lend to the best creditors and that's it. And so monetary policy with rates at zero has run its course. The Fed have told you that, the ECB have told you about, they've all said it needs to go to fiscal. And they're bored of telling governments this. Now, governments don't like it, and people don't like it because of deficits. And the MMT is the crowd in the middle of saying it doesn't matter. But either way, there is no choice. You either somehow have to pay back all of this debt and go to austerity, which they tried and it failed, or you have to try the logical conclusion of MMT, which is to give the power of fiscal to central banks and merge the two. It's slightly terrifying, but it also, I think, is going to be incredibly, incredibly exciting in terms of how you can change, I said, economics, how you can manage the economy. It's a really interesting phase, because I do think you can do some real good here. You know, we go back to the barbers and the restaurants and the people like that. Right now, it's so blunt trying to be able to do that. But once you do these central bank digital currencies and you have some sort of programmable money attached to it, you can basically do anything. You can say, right, anybody who runs a restaurant that's registered as a restaurant, you're going to get a check for $25,000 and you have to spend it within 3 months or it evaporates. Right, that's programmable money. That's astonishingly powerful as a stimulus, because you can get people to behave in the way that you want them to behave that does the best good for society as a whole. Obviously, central banks being central banks and governments being governments will always screw it up. But in theory, it's a really powerful idea. It's groundbreaking, I think. It is, I think it's tricky to know. I think there is a shift outside of cities generally. I think we saw that after 9/11. I think this will strengthen the story of millennials moving to the suburbs. Don't forget, half of them grew up in the suburbs. Their parents did the same thing. So that's not uncommon. So I think that movement remains. Obviously, what we're doing now, Zoom, the rise of video, as the media that crushes all medias, that's real. That's not going away any longer. The rise of the SaaS business model and those kind of high margin tech companies, become more and more apparent that the old world doesn't work. You could do it at a micro level, like we talked about, creating artisan shops and stuff like that, or artisan clothing or whatever it may be. But to do it at scale, that's gone. It's gone forever, I think, and that's okay. There's just different ways of doing business now.